Welcome, you're watching Editor's Take. This is Vaibhavi Khanwalkar. Oil prices seem to be climbing. They're reaching nearly $75 per barrel, which is their 2019 high. Ravi Krishnan is joining us now to help us understand more about this. Ravi, hi and welcome. So, what's the reason behind this climb?
See, the key reason is because the US has ended the exemptions it gave to its sanctions on Iran.
Right.
Because of those exemptions, some countries like India were able to import up to 300,000 barrels per day. Now, can't do it anymore.
Okay.
So, essentially, the supply of oil will come down now. There is already an OPEC supply cut. There is a conflict on in Libya, which is reducing supplies from there.
Right.
And there are sanctions on Venezuela also. Because of all these reasons, oil supply is not going to increase in a hurry. And for countries like India, they won't find alternatives to Iranian oil in a hurry. Because of this, oil prices are climbing.
Right. So, that's interesting, but what are the macro impacts that India is going to see because of this?
Well, oil prices are very important to India because, as we all know, India is the third largest oil importing economy in the world.
Right.
So, low oil prices were incidentally supposed to act as a tailwind to the Indian economy in the current fiscal and the next, according to the IMF World Economic Outlook report, which came at the beginning of this month.
Right.
So, clearly, even the IMF doesn't, know how to predict where oil prices will go correctly.
Right.
Now, as far as inflation is concerned, it will feed into inflation. Therefore, it could act as a hurdle to further rate cuts.
Right.
It will also, upset the fiscal balance. If oil prices rise too high and the next government decides, to bring back oil subsidies, the rupee is already under pressure because, we've seen that inflows into equities are coming down.
Right.
The rupee is depreciating, and because of that, the current account balance will also come under pressure.
Right.
So overall, from all aspects, high oil prices are a big dampener for Indian economic growth.
Right. So, that's about the macros. What about the market's reaction to this?
Well, the markets can't be completely, divorced from the underlying economic reality.
Right.
So what we are saying is even before, oil prices were on the rise, the economy was not doing that well, as high frequency indicators are telling us.
Right.
So in fact, this increase in oil prices could not have come at a worst time for India.
Okay.
Now, as far as the markets are concerned, valuations are pretty high. They are the highest in a long time. So, in this kind of scenario, all the market needs is some kind of negative trigger for a correction to take place.
Right.
I think that's what we are seeing happening now.
Right. Thank you so much for those insights, Ravi. With that, it's a wrap on this edition of Editor's Take. For more such news and views, stay logged on to moneycontrol.com. Thanks for watching.